Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. If you have been on the internet in the last 3 years or so and you are interested in investing, you have likely come across somebody, whether they're looking at a whiteboard, whether on TikTok, sometimes on Twitter, and they're talking to you about life insurance policies and how you can use those to invest and become super wealthy. They'll tell you that the secrets of the wealthy, people who have billions and billions of dollars or even became millionaires, did so through life insurance. Sometimes it's called an IUL, an Index Universal Life Insurance Policy. Sometimes it's a whole life policy. Sometimes they'll tell you to get a insurance policy, an LLC, and a trust, and do all these fancy techniques, and this is what can absolutely build wealth. Today's video, we need to break down and really just have a discussion around how realistic that is and whether or not life insurance as an investment is a good idea. And I want to really emphasize the word as an investment. Should you have life insurance? I think people who have kids and people they care about absolutely should. Okay, I got life insurance for my kids, something happened to me, the house is paid for, college, a good chunk of college is going to be taken care of, right? That absolutely makes sense. But is it a good idea for me to have my life insurance for me to make more money? That is the key. And is it better or worse than other investing categories like real estate, like your 401k, like a Roth IRA, things like that? So here's the first thing. You'll see a lot of these videos and sometimes they will throw out a lot of confusing math. The other thing too is they'll instantly tell you that your 401k is a scam. Anybody that tells you that a 401k or Roth IRA is a scam is likely trying to sell you something. These policies, this is coming from somebody who was one of the top 100 most influential financial advisors, okay? Been there, done that. And I have my life insurance license. And I'll tell you now that from a financial advisor perspective, you get paid more from life insurance than you do from suggesting an index fund, which is what I think most people should be investing in, okay? That is a fact. That is a fact. If you go to, and that's one reason you know is because you can go to Public right now and go buy an index fund for $0. You can donate to the app if you want to, but you can get it for $0. You cannot get any of these life insurance policies for free. And a lot of times those fees are baked in. You may be paying the insurance company $500 a month, but what you don't notice is 100, 120, sometimes 150, whatever that percentage is going to the person who sold you the policy. So that's number one. Number two, you don't want to compare an account to a product. When we say life insurance, that is a product in and of itself. A 401k is an account. Those two things do not necessarily equal. And the other thing too is you want to watch out for a lot of these tax-free strategies, infinite banking strategies that they'll tell you about too. A lot of times they're telling you to invest in their life insurance product. It's going to make you some money, and then you can loan yourself your own money, by the way, and then go and do other stuff. Yes, you can use life insurance to loan yourself some money sometimes at a lower rate than what you would at the bank. But again, you're already paying fees to them already, and you're likely and usually getting a much lower return in advance. So the math is always skewed. There's someone on Twitter that does not really understand finance at all, but extremely popular on TikTok. And I'll see if I can find the tweet. But essentially, he says that, look, he's going to post all this stuff and he's going to compare the math, and he talks about the 4% rule and says that you can make more money and have more money every single year through this life insurance policy compared to what you can get out of your 401k. The problem is, or Roth IRA, I think is the one he had talked about. And either way, you'll see it here. But in either case, the problem is the 4% rule is optional. The 4% rule, for those who actually follow the channel and just understand investing, is you invest your money in 401k, you invest your money in whatever it is you want to invest in, and to maintain the exact level of capital, you pull out 4% a year. You decide whether or not you want to pull out 4% a year. That's not it's a rule of thumb. It is not a law that you must pull out 4% a year from any of your accounts. You literally pull out as much as you want to, but he's equating these in a way that doesn't really make sense. If you don't pause the video or ask questions, you're not going to notice a lot of the math that is incorrect and a lot of the kind of magic numbers that they're out there. You'll also notice that any and every time that somebody does these types of videos, they will almost never tell you about the fees. They'll tell you about the tax benefits. They'll tell you about what they think the return could be, but they they never tell you about how much you are paying for those policies. That is the thing that you really want to be concerned about. The last thing that I'll say is this: the wealthy. Whether you want to talk about billionaire investors or even people who hit the first million to 5 million or so. The question is, how did they get there? And I'm here to tell you now, and there's data to prove this too. I'll make sure that I add that into the screenshot that you're probably watching right now. Life insurance doesn't make up the majority of their assets. Those who become wealthy either got there through the 401k, got there through business ownership, or owning a large equity stake in a company that perhaps went public. You look at the Warren Buffetts of the world. The richest man right now owns, I think it's LVMH. You know, you had Elon Musk, who owns Tesla. They didn't get there by buying life insurance. That's not really how it works. The easiest route is through the stock market. Another good route is through real estate and obviously business ownership. Those are the three main ones, okay? Almost nobody got rich by investing in life insurance, investing in a lot of these IULs, index life insurance policies, and all these like super fancy things. Use life insurance for what it's supposed to do, insuring your life, and that's really it. The only time that I think people should consider investing or using life insurance as an investment is this: if you've already maxed out on all of your retirement accounts and you've already put a significant amount into a regular brokerage account and you're just investing with no tax benefits, if you've done that and you say, look, you know, I maxed out my 401k, I maxed out my IRAs, I have another $20,000 or $30,000 that I don't need and I need to put to work, then yeah, once you checked off all those boxes, then it makes sense. But how many people actually have that amount of money laying around to do those types of things? Not many, not many. So always pay attention to that. And if you ever have any questions or you start to see these videos, which I'm sure you probably have, just ask them, what are the fees? Okay, ask them, how much would I pay in fees over 10 years? Okay, and then ask them to compare how much you would pay in fees in 10 years compared to an index fund. And it's not going to be comparable anytime. They almost never will tell you, or they'll say it should be properly structured, but again, they always skip around the fees. And that's because usually, I would say upward to 85-90% of the time, the people who do those videos are the salesmen, right? They give you their number, they want you to call and book and actually buy the policy through them because they are the ones getting paid. Those are sales videos, they're not educational videos. So you want to be very, very careful. I let go of my licenses, okay? I don't care to sell anybody any life insurance policy at all, or any stock for that matter. You want to go buy a stock, fine. You want to go take a course and I'll teach you, that's fine. But you don't have to, right? I'm here to actually educate people and do so in a way that absolutely makes sense without gaining from someone's ignorance at times, but also trying to sell you a dream. You know, we talk about the gains and the losses. People who are selling you something don't always give you that level of transparency. So that's my spiel. Someone that asked a question, I think a few weeks ago, I never really got around to it. If you want more deep dive breakdowns on that, I can either bring somebody on the show, or I say a show, bring somebody on the channel, which I guess is a show now, call it what you want. Bring somebody on the channel and we can kind of discuss the differences between them, or I can do a whiteboard video and really start to break everything down. Let me know what's going to be most helpful for you, because again, I see a lot of people get taken advantage of in this space around products like that and don't really understand all the ins and outs. Okay, all right, that is it for me. I will talk to y'all later.